Right now, there are retirees sitting on a Social Security check that is still short by $300, $600, even $1,100 a month, and they have no idea because the letter that would have told them never came. Quick note before we get into it. This is educational, not legal or financial advice, so treat everything here as a starting point and confirm your own numbers with Social Security directly. Now let's get into why this matters to you. Here's the scenario. You taught school for 22 years in a state where teachers don't pay into Social Security, or you spent 2 decades as a firefighter or a police officer, or you worked for the federal government under the old retirement system before 1984. Or maybe none of that is you at all. Maybe it's your husband who did that work, and he passed away, and you went to claim a widow's benefit on his record, only to be told years ago that you'd get little or nothing because of your own pension. If any of that sounds familiar, then a law that passed back in January of 2025 is either already sitting in your bank account, or it's still owed to you, and nobody has told you that yet. And the second group is bigger than most people think. I want to be clear about something before we go any further. This isn't a story about a law that failed. For the large majority of people it touched, the Social Security Fairness Act worked exactly as intended, and the money moved fast, in some cases faster than the agency itself expected. This video isn't about tearing that down. It's about the specific, identifiable slice of people the fast version of the story leaves out, and giving you the real numbers so you know, in the next 15 minutes, whether you're one of them. Let's be specific about who this touches, because a lot of people hear public pension and assume it doesn't apply to them. It shows up most often in a handful of states where certain public jobs were never covered by Social Security in the first place. States like California, Texas, Illinois, Ohio, Massachusetts, Colorado, Louisiana, and a few others where teachers, in particular, were kept outside the system for decades. It also shows up with firefighters, police officers, and other state or local government workers almost anywhere in the country who spent part of their career in a job that paid into a separate pension instead of Social Security. And it shows up with federal employees who were hired before January 1st, 1984, under the old civil service retirement system rather than the newer system that replaced it. If you fall into any of those categories, or your spouse did, keep listening, because the dollar amounts are about to get specific. Here's where this comes from. On January 5th, 2025, the Social Security Fairness Act was signed into law. It repealed 2 rules that had been reducing checks for public workers for decades: the windfall elimination provision, which cut benefits for people who also worked jobs that didn't pay into Social Security, and the government pension offset, which cut spousal and survivor benefits for that same reason. Those 2 rules are gone now, permanently, and the repeal is retroactive all the way back to January of 2024. According to the Social Security Administration's own numbers, by July of 2025, the agency had sent out more than 3.1 million payments, totaling $17 billion, 5 months ahead of its own schedule. That's real money that already moved for a lot of people. But most people got paid, and you got paid are 2 very different sentences. And today I want to walk you through exactly how to tell which sentence applies to you, using the actual numbers, not the inflated ones you may have seen floating around on other channels. Let's go through this piece by piece, because there are several different situations here, and the dollar amount and the action you need to take is different for each one. Number 1. If you were already collecting a Social Security check in 2024 that was reduced by the windfall elimination provision, the average bump to your monthly payment is around $360, according to Congressional Budget Office estimates. That's over $4,000 a year, every year, for the rest of your retirement. Here's a concrete example. Say you're 70 years old, you taught in Texas for most of your career, and also worked 15 years in the private sector, and WEP had been shaving roughly $300 off your check every month for the last several years. If your case was processed cleanly, your monthly deposit should already reflect that increase, and you should have already received a separate lump sum payment covering the difference back to January 2024. Now here's where it gets important. The mistake most retirees make here is never actually checking the number. They assume the increase happened because the news said it happened everywhere, and they never open their My Social Security account to confirm the new amount actually matches what they were told to expect. A headline about millions of people isn't a receipt for your account specifically. Number 2. If you're the spouse of someone affected by these rules, not divorced, still married, both of you living, and your own spousal benefit was reduced by the government pension offset, the average increase here is bigger, around $700 a month, according to the same CBO estimates. Say you're 68 years old, your husband is a retired police captain, and you receive a spousal benefit on his record that used to be cut nearly in half because of your own small government pension from a county job. Under the repeal, that offset disappears completely, and your spousal benefit should be recalculated at the full, unreduced rate. Most people stop here and assume they're done, but don't. The mistake in this category is assuming the fix only touches the worker's own benefit and forgetting to check the spousal portion separately, since these often show up as two different line items on your benefit statement, and one can be corrected while the other lags behind. Number 3, and this is where the real money is. If you are a widow or widower and you were already collecting a survivor benefit that had been reduced by the pension offset, CBO estimates the average increase here is around $1,190 a month. Run that out over a year, and you're looking at over $14,000 in additional income annually for the rest of your life, on top of whatever retroactive lump sum you were owed back to January 2024. This is the single largest category of increase in the entire law. And if this is you, and you already had an approved survivor claim before 2024, this should have already been paid automatically, with no new application needed on your part. Here's the part they never tell you, though. Already approved is doing a lot of work in that sentence, and it's exactly why the next group matters so much. Now here's where it gets important, and this is the part almost nobody is explaining correctly. Number 4. What if your survivor or spousal benefit wasn't just reduced? What if it was wiped out completely, all the way to zero, years ago, and because of that, you never bothered filing a claim at all? Or you filed once, got told the offset erased your entire benefit, and never tried again? This is a large group of people, and here's the hard truth. If there's no approved claim sitting in the Social Security system with your name on it, the automatic correction process has nothing to correct. The agency's own guidance is direct about this. If you didn't previously apply for spousal, divorced spousal, widow, or divorced widow benefits because the offset would have reduced them to zero, you have to contact Social Security yourself and file a brand new application. Nothing happens on its own, ever. There is no automated sweep coming to find you because from the system's point of view, you were never a claimant to begin with. Here's the part where I want to correct something you may have seen elsewhere, because getting this number wrong could cost you real disappointment, or worse, a bad financial decision made on the wrong assumption. Some content out there is telling widows they can walk away with back payments of $22,000 or more just for filing now. That number assumes full retroactivity back to January 2024. But the Social Security Fairness Act did not change the underlying retroactivity rules that govern brand new applications. Those rules, which are still fully enforced today, generally cap retroactive payments for a new retirement or survivor application at 6 months before the month you file, not the full stretch back to January 2024, and not 12 months, unless you're filing based on disability. A group of senators, including Susan Collins, Bill Cassidy, John Cornyn, and John Fetterman, have pushed Social Security to apply full retroactivity to everyone affected, arguing Congress never intended new applicants to be treated worse than people who already had a claim on file when the law passed. As recently as February 2026, those same senators sent another letter pushing the agency on exactly this point. But as of now, the agency's position, confirmed in writing back in April of 2025 and unchanged since, is that the 6-month cap still applies to new filers. So here's the honest math, worked out loud. If you're a widow whose survivor benefit was wiped to zero, and you file today, you are very likely looking at up to 6 months of retroactive benefit at the new uncapped rate. Using that $1,190 average, that's a lump sum in the neighborhood of $7,000. Not $22,000, plus your full monthly benefit restored going forward for the rest of your life. That monthly restoration for life is where the real value actually sits. It's simply not the single eye-popping check some other videos are implying, and I'd rather you walk in with the accurate number than be disappointed on the phone. Number 5. There's also a smaller, related group worth naming here, widows and widowers who qualified under both old rules at once, meaning their own benefit was reduced by the windfall elimination provision, and their survivor benefit was separately reduced by the government pension offset. In some of these mixed cases, one side gets corrected in the automated system, while the other requires manual review, simply because the case doesn't fit the standard template the software was built around. If you fall into this category, don't assume that one deposit landing means the entire picture is fixed. Pull up your statement and check both numbers separately, your own retirement or disability amount, and any spousal or survivor amount, since they're corrected under two different mechanisms, even though they're both part of the same law. Number 6. Complex cases are still moving slowly, even this far out from the law's passage. Social Security reported completing 92% of new applications by the middle of 2025, and the agency said it had substantially finished the automatic corrections for existing claims by that summer. But reporting from as recently as March 2026 confirms that a meaningful number of retirees are still waiting for their full benefit more than a year after the law passed, particularly people with layered work histories that don't fit neatly into the automated system. Someone who worked under two different pension systems across their career, for instance, or someone whose earnings record has old gaps and corrections that date back decades. If your situation involves anything unusual like that, don't assume silence means still processing normally. Silence can also mean stuck in a manual queue, and there's no notification that tells you which one it is. The only way to know the difference is to ask directly. Number 7. Even if your correction went through cleanly, two other changes this year affect your net result, and most retirees only look at one side of the ledger. The 2026 cost of living adjustment pushed the average retirement benefit up by roughly $56 a month, from about $2,015 to about $2,071. That's good news on its own, but the standard Medicare Part B premium jumped almost 10% this year, from $185 to $202.90 a month. And that premium is usually deducted directly from your Social Security deposit before it ever reaches your bank account. So if your check looks bigger than last year, but smaller than you expected given everything you've read about the Fairness Act, that Medicare premium increase is very likely a real part of the explanation, and it's worth doing the actual subtraction yourself. New gross amount minus the new Medicare premium, compared against last year's net deposit, instead of guessing at what changed. Number 8. If you did receive a retroactive lump sum in 2025, this is the first tax season where that shows up on paper. The Social Security Administration confirmed that 2025 retroactive Fairness Act payments appeared on the SSA 1099 forms issued in January 2026, and a portion of that extra income is very likely taxable, depending on your total income for the year. Here's some good news that can offset that, though. As part of the tax law signed on July 4, 2025, there's now a senior bonus deduction of up to $6,000 for an individual, or $12,000 for a married couple filing jointly, available to people who qualify by age, on top of your existing standard deduction. To get the full amount, your modified adjusted gross income generally needs to be under $75,000 if you're single, with a higher threshold for couples, and the deduction phases out gradually above that line. If you had a large Fairness Act lump sum land in 2025, this new deduction is genuinely worth checking against your specific numbers before you assume you owe more tax than you actually do. Number 9. It's also worth being honest about who this law does not touch, because I'd rather set the right expectation than have you spend an afternoon on hold for nothing. According to Social Security's own figures, roughly 72% of state and local public employees were never affected by these old rules in the first place, because they paid Social Security taxes the entire time, just like most private sector workers. If that's your situation, there's no hidden check waiting for you, and no phone call is going to change that. This law is specifically for the minority of public workers and their spouses and survivors who spent real years in jobs that opted out of Social Security taxes. There's also a smaller group worth a quick mention: people who spent part of their career under a foreign country's Social Security system instead of the American one. If that applies to you, the same general principle holds. If you already had an approved claim, the correction should already be reflected in your check. If you never filed because you assumed it wouldn't be worth it, that's a conversation worth having with Social Security directly, since foreign work history can interact with these rules in ways that are genuinely case-specific. Number 10. One operational change worth knowing about, separate from the Fairness Act itself. Starting March 7, 2026, Social Security moved to a centralized national scheduling system for many appointments and case handling tasks, replacing the old model where your local field office handled everything for you personally. Your monthly benefit amount isn't affected by this change, but your experience calling in might be. You may get routed to a different representative than you spoke with last time, and that representative may not have the full history of your specific case in front of them the way a familiar local office once did. This makes it even more important to write down exactly what you're asking and exactly what you're told on each call, including the date, the representative's name if they give it, and anything they tell you about expected timing, because you may effectively be starting over with a different person on your next call. Before we get to the action step, let's pull all these numbers into one place, because that's the part people actually want to remember. If WEP affected your own retirement benefit, expect roughly $360 more a month. If GPO affected your spousal benefit, expect roughly $700 more a month. If GPO affected your survivor benefit, expect roughly $1,190 more a month, the largest single category. If you already had an approved claim before 2024, all of that should already be in your account, retroactive to January 2024, and confirmed by that one-time lump sum. If you never filed because your benefit had been reduced to zero, you'll need a brand new application, and the honest retroactive window for that new application is up to 6 months, not 2 full years, until or unless Congress or Social Security changes that rule. And regardless of which category you're in, check your net deposit against the 2026 Medicare premium increase before you assume something's wrong. One more thing that trips people up on the phone. This whole process now has a specific script that gets you routed correctly, and using the wrong words can send you into a generic queue where the agent has no idea what you're talking about or why you're calling. When you call, say the words Fairness Act when the automated system asks how it can help you. That specific phrase is what routes you to a representative who is actually trained on windfall elimination provision and government pension offset cases, rather than a general benefits agent who has to look up what you mean from scratch. And if you're a widow or widower filing a brand new survivor claim, know up front that this particular application cannot be filed online through the website. It has to be done over the phone or in person. So don't waste an afternoon hunting for a form that doesn't exist on the internet. Here's your one action step for this week, and it takes about 15 minutes start to finish. Log into your account at ssa.gov, open your benefit statement, and compare your current monthly deposit to what you were receiving before March of 2025. If the number hasn't moved, and you know you were affected by either of these old rules, or if you never filed a spousal or survivor claim because you were told years ago that it would pay you nothing, call 1-800-772-1213, say the words Fairness Act when prompted, and ask this exact question. Do I need to file a new application? And if so, what retroactive period am I entitled to? Write that question down before you dial so you ask it exactly that way, in that order. That single phone call either confirms you're already fully paid, which is a genuine relief, or it starts the clock on money you are legally owed and currently not receiving, which is worth far more than 15 minutes of your time. The single idea I want you to leave with is this: a law passing and a headline saying millions of dollars went out is not the same thing as your specific check being correct. For most people watching this, the fix already happened, quietly, in a direct deposit that looks slightly bigger than usual sometime last year. For a smaller but very real group, the widow whose benefit was reduced to nothing, the mixed case that needed manual review, the retiree who never opened their online account to actually confirm the new number, the money is either delayed, capped at a smaller amount than they'd been led to expect, or sitting completely unclaimed because no application was ever filed. None of those three situations get fixed by waiting. They get fixed by one phone call, using the right words, this week. If this helped you understand where you actually stand, this is exactly the kind of thing this channel covers every week. The real numbers behind the rules that affect your retirement, not the exaggerated version you might see elsewhere. Subscribe if you want more breakdowns like this one, and next week we'll be walking through another change quietly affecting retirement income that most people haven't looked at closely yet. And if you know a retired teacher, firefighter, police officer, or a widow who's never quite understood why her check felt smaller than it should, send her this video. It might be the reason she finally makes that phone call.